All right, let's dive into another deep dive. Today, we're going to be checking out the world of luxury hotels and seaside resorts. With Oriental Hotels Limited, or as we'll be calling them today, OHL for short, we've got their latest Q3 2024-25 financial reports, a press release highlighting some of their recent achievements, and even a set of thought-provoking questions that I think will really help us to understand what's going on behind the numbers.
Yeah.
Think of it as your all-access pass to understanding a major player in the Indian hospitality industry.
Yeah, like we're getting a peek behind the curtain. Beyond just like those glossy brochures and Instagram-worthy photos, right? We'll see how OHL is really performing and what strategies they're using to navigate this ever-changing market.
Exactly. Now, you might not know OHL by name, but you probably heard of their parent company, the Indian Hotels Company Limited, or IHCL.
Right.
They're the powerhouse behind some of India's most iconic hotels.
That's right. And OHL itself operates 7 properties under brands like Taj, Vivanta, and Gateway. They're even celebrating a pretty big milestone this year, the 50th anniversary of the Taj Coromandel in Chennai. Talk about a legacy.
50 years, that's impressive. And to make things even more interesting, OHL is publicly traded. So these financial reports are really a window into their health and strategy for anyone interested in the market. So let's dive into their standalone performance for Q3 2024-25. First up, revenue. It's up a healthy 20% year over year, hitting INR 122.05 CR. That's a pretty strong indicator that they're doing something right, wouldn't you say?
Absolutely. A 20% jump in revenue suggests they're capturing a growing share of the luxury travel market. But the real question is, what's driving this growth? Is it simply higher room rates? Or are they seeing increased occupancy as well? That's something we'll need to dig into.
Good point. Now, their EBITDA, which gives us a sense of their operational efficiency,
Mhm.
also saw a nice boost of 22%, reaching INR 34.88 CR. So they're not just bringing in more revenue,
Mm.
but they're also managing costs effectively.
Now, for those who might not be super familiar with EBITDA, it basically tells us how much profit a company makes from its core operations, before taking into account things like interest, taxes, depreciation, and amortization. In the hotel industry, a healthy EBITDA is crucial because it reflects their ability to generate profits from their rooms, food and beverage services, and other core offerings.
Okay, that makes sense. So higher EBITDA means they're keeping a good chunk of that revenue after covering those essential costs. But here's where things get a little more complex. Their profit after tax actually dipped slightly compared to the same quarter last year, coming in at INR 13.99 CIR. So more revenue, better operational efficiency, but a slight dip in profit. What's the story there?
That's the million-dollar question. It could be a sign of rising costs, maybe due to inflation, or investments in those new projects they've been talking about. Remember, they're publicly traded, so they need to balance short-term profits with long-term growth strategies. It's the delicate balancing act.
So perhaps they're spending money to make money, like upgrading properties or expanding into new markets. I mean, they did mention sprucing up the Taj Coromandel for its 50th anniversary. That can't be cheap.
Exactly. Renovations, marketing campaigns, new staff, those costs can definitely add up. But there's another piece of the puzzle that's worth noting. The report shows an 11% increase in the average room rate. This suggests that OHL is successfully commanding higher prices, likely due to that strong brand recognition we talked about, and a focus on delivering a truly desirable customer experience.
I see. So they might be strategically accepting a slightly lower profit margin in this quarter to invest in initiatives that will pay off in the long run. It's like they're playing chess, thinking several moves ahead.
Right. They're not just reacting to the market, they're actively trying to shape it. And that's what makes analyzing a company like this so fascinating.
Okay, now let's zoom out and look at their cumulative performance for the first 9 months of the fiscal year. Revenue is still up slightly compared to the same period last year, reaching INR 311.27 CR. However, both their EBITDA and profit after tax are down. EBITDA at INR 75.63 CR and profit after tax at INR 26.83 CR. So the growth isn't as consistent as that impressive Q3 might have led us to believe.
That's where understanding the nuances of the hospitality industry comes into play. We need to consider things like seasonality. Certain quarters might be stronger due to travel patterns or holiday seasons. It's possible that Q3 is typically a strong period for OHL, while the first 9 months reflect a more moderate overall trend. We need to look at historical data to see if this pattern holds true.
That's a great point. So not necessarily a reason to panic, but definitely something to keep an eye on. Now let's shift gears a bit and talk about consolidated financial statements. I know it sounds a bit technical, but bear with me.
Don't worry, it's not as complicated as it sounds. Essentially, consolidated statements include not just OHL's core operations, but also their subsidiaries, joint ventures, and associates. It gives us a broader view of their financial performance as a group, rather than just looking at them in isolation.
So it's like looking at the entire ecosystem, not just one piece of it.
Precisely. And this is where those thought-provoking questions from our source material really come into play. They challenge us to think critically about what these numbers really mean and how they fit into OHL's overall strategy.
I love that. So let's take a look at one of those questions. This one asks, how did the performance of OHL in Q3 FY25 align with market expectations or analyst predictions? What do you make of that?
That's a crucial question for any investor. It prompts us to consider how these results stack up against what the experts were anticipating. Did they exceed expectations, meet them, or fall short? And what might that tell us about investor sentiment and the market's perception of OHL's future prospects? It's like trying to read the tea leaves of the financial world.
I'm starting to see how these numbers can tell a much bigger story. It's not just about the raw data, it's about what those numbers reveal about a company's direction and its potential for growth. All right, let's explore another one of those insightful questions. This one asks, did Oriental Hotels Ltd's expansion plans or new projects contribute to the overall financial performance in Q3 FY25?
Now that's a question that takes us right to the heart of OHL's strategic initiatives. Are they investing in new properties, upgrading existing ones, expanding into new markets? And how are these actions impacting their bottom line? We might see increased costs in the short term as they invest in those ventures, but potentially greater returns down the line as those investments begin to pay off. It's a classic case of weighing immediate gratification against long-term vision.
It's like planting a seed. You have to nurture it and be patient before you see the fruit of your labor. Okay, one last question for this segment. What are the company's projections for the next quarter based on the results of Q3 FY25?
The crystal ball question. This is where we look for any forward-looking statements from the company. Are they optimistic about the future? Cautious? And what factors do they identify as potential influences on their performance? This gives us a glimpse into their strategic thinking and how they're navigating the ever-changing landscape of the hospitality industry.
So we've covered the standalone performance, gotten a taste of the consolidated picture, and start to think critically about what these numbers might reveal about OHL's overall health and strategy. But we're not done yet. Next up, we're going to explore the power of their brand and some of their key strategic initiatives. Stay tuned.
You know, sometimes the most valuable assets aren't even listed on a balance sheet. Things like brand strength, reputation, and customer loyalty. Those can be real game changers.
You're so right. And speaking of brand strength, the press release we have here boasts about some major wins for the Taj brand in 2024. They snagged the titles of both India's strongest brand and the world's strongest hotel brand. That's a pretty big deal.
It really is. It's a testament to the power of a legacy brand. Think about it. People don't just stay at a Taj hotel. They buy into an experience, a history, a certain level of prestige. That kind of brand equity is invaluable.
I totally get that. It's like the difference between buying a regular cup of coffee and going to a fancy high-end cafe. You're paying for more than just the caffeine.
Exactly. It's the ambiance, the service, the story behind the brand. And in a competitive market like hospitality, those intangible factors can make all the difference.
So how does this brand strength translate into actual financial performance? What's the connection there?
Well, for one thing, strong brands can command premium prices. People are willing to pay more for a product or service they perceive as high quality and exclusive. It's like the old saying, you get what you pay for. And in the case of a brand like Taj, they've cultivated an image of luxury and exceptional service that allows them to charge a premium.
That makes sense. And I imagine a strong brand also fosters customer loyalty. People who have a positive experience are more likely to come back for more, right?
Absolutely. Customer loyalty is like gold in the hospitality industry. It means repeat business, positive word-of-mouth marketing, and a more stable revenue stream. And a brand like Taj, with its legacy and reputation, has a built-in advantage when it comes to cultivating loyal customers. They've been consistently delivering on their brand promise for decades. And that kind of consistency breeds trust and loyalty.
Now, the press release also mentions the rebranding of the Madurai and Coonoor hotels under the Gateway brand. What's the strategy there? Is it just a cosmetic change, or is there something deeper going on?
This is where things get really interesting. This rebranding could be a savvy move to target different market segments. The Gateway brand might appeal to a slightly younger and more budget-conscious traveler who still appreciates a certain level of quality and service. It's like creating a stepping stone to the world of Taj, so to speak.
So kind of like a gateway to their more luxurious offerings, a way to introduce new customers to the company's portfolio and potentially hook them on the Taj experience.
That's exactly it. It's a way to diversify their offerings and capture a wider slice of the market. Not everyone can afford, or even wants, the ultra-luxury experience of a Taj hotel every time they travel. But by offering a more accessible brand like Gateway, they can attract a wider range of travelers and potentially cultivate a new generation of loyal customers.
That's such a smart strategy. It reminds me of what we discussed earlier about OHL's expansion plans and how those might impact their financial performance. These rebranding efforts might not show huge returns right away, but they could be laying the groundwork for sustained growth in the future.
It's all about playing the long game, building a diverse and resilient portfolio that can adapt to changing market conditions and consumer preferences.
It's like they're hedging their bets, making sure they have a presence in multiple segments of the market.
Exactly. And that kind of strategic thinking is essential for any company that wants to stay ahead of the curve in a dynamic industry like hospitality.
So let's shift gears a bit and talk about some of the broader trends shaping the hospitality industry. You mentioned earlier that things are always changing, and I'm curious to hear your take on what those changes might mean for a company like OHL.
Well, one trend that's been gaining momentum is the rise of experiential travel.
Mhm.
People aren't just looking for a place to sleep anymore. They want unique, immersive experiences that create lasting memories. They want to connect with the local culture, try new things, and share their adventures with the world.
I can totally relate to that, especially with social media being so prevalent these days. Everyone wants to capture those Instagram-worthy moments from their travels and share their experiences with their followers.
Exactly. And that's where brands like Taj, with their focus on luxury and personalized service, really shine. They're not just selling hotel rooms. They're curating experiences. Think cooking classes with renowned chefs, private tours of historical landmarks, or even just creating a truly relaxing and pampering environment where guests can escape the everyday hustle and bustle.
I can picture myself sipping a cocktail by the pool at the Taj Coromandel, feeling like a movie star. Okay, besides experiential travel, what other trends are on your radar? What else should we be paying attention to?
Well, sustainability is becoming increasingly important. Travelers are more conscious of their environmental footprint and are actively seeking out hotels that align with their values. They want to know that the places they stay are committed to reducing their impact on the planet and supporting local communities.
So hotels need to be more than just luxurious and comfortable. They need to be eco-friendly and socially responsible as well.
Absolutely. It's not just a nice to have anymore. It's a must have. And OHL seems to be aware of this.
Hmm.
At least based on their press release, they mentioned initiatives like reducing their carbon emissions,
Yeah.
implementing water conservation measures, and
Mhm.
supporting local artisans and businesses.
It's about creating a positive impact, not just profits, which is a good thing. Because I think consumers are becoming more discerning and demanding. They want to support companies that share their values.
Exactly. And that's why it's so important for companies like OHL to not just talk the talk, but to actually walk the walk when it comes to sustainability. They need to demonstrate a genuine commitment to these principles if they want to attract and retain environmentally conscious travelers.
Okay, any other trends that you think will shape the future of the hospitality industry?
Well, technology is playing an increasingly significant role in shaping the travel experience, from online booking platforms to personalized recommendations and even virtual reality tours. Hotels need to embrace these advancements and integrate them seamlessly into their operations if they want to stay competitive.
So think apps that let you control the room temperature, order room service with a few taps on your phone, or even book spa treatments without ever leaving your room.
Precisely. It's about creating a seamless and personalized experience for the tech-savvy traveler. They want convenience, control, and customization, and technology can help deliver all of that. But it's not just about fancy gadgets and apps. It's also about using data and analytics to understand customer preferences
Yeah.
and tailor their offerings accordingly.
So it's like hotels are becoming more like tech companies in a way.
In a sense, yes.
Yeah.
They need to be agile, innovative, and data-driven to thrive in this evolving landscape.
Mm.
And that's where a company like OHL, with its legacy of excellence and its willingness to adapt,
Mm.
has the potential to really stand out.
So we've talked about brand strength, strategic initiatives,
Mhm.
and some of the major trends shaping the hospitality industry. But what does all of this mean for someone looking at OHL as a potential investment? What's the big takeaway here?
Well, it sounds like they're facing some pretty serious competition out there, not just from other hotel chains, but also from these larger trends we talked about
Mm.
that are reshaping the whole industry, right?
Yeah. So how do we weigh all this information? What's the verdict? Is OHL well-positioned for future growth?
I think that's the key question, isn't it? And like most things in business and finance, The answer isn't a simple yes or no. There are a lot of factors to consider. On the one hand, OHL has a lot going for it. They've got that strong brand recognition, particularly with the Taj brand, which carries a lot of weight in the luxury market. They're also making those strategic moves to diversify their offerings,
Hmm.
like rebranding those hotels under the Gateway brand to attract a wider range of travelers. And they seem to be aware of the importance of sustainability and technology, which are becoming increasingly crucial for success in this industry.
So they're checking a lot of the right boxes. They've got the brand power, the strategic vision, and they're adapting to the changing market.
Right. But on the other hand, there are some potential challenges they need to navigate as well. We saw those fluctuations in their profitability, which suggests they might be facing some headwinds, whether it's rising costs,
Yeah.
increased competition, or simply the cyclical nature of the hospitality industry. And while their Q3 performance was pretty impressive, their 9-month trend tells a more nuanced story,
So it's not all smooth sailing. There might be some choppy waters ahead.
potentially. And that's why it's so important to look beyond the headlines
Hmm.
and really dig into the details. We need to consider their financial performance in the context of their strategic initiatives, the broader industry trends, and the overall economic climate. It's like piecing together a puzzle.
Okay, so no easy answers. But if you had to sum it up, what's your overall assessment of OHL's prospects? Are they a good bet for investors?
Well, I'm not giving out financial advice here,
Yeah.
but I think OHL is a company worth watching. They've got a lot of potential, but they also face some real challenges. Ultimately, their success will depend on their ability to execute their strategy effectively, adapt to that evolving market, and continue to deliver those exceptional experiences that keep guests coming back for more.
That sounds like a pretty good recipe for success in any industry.
Absolutely. It's about finding that sweet spot between tradition and innovation,
Hmm.
between delivering on your brand promise
Mm.
and staying ahead of the curve.
So for anyone listening who might be considering investing in OHL, or even just interested in the hospitality industry in general, what's the one key takeaway you would leave them with?
I would say this. Don't just look at the numbers. Look at the story behind the numbers. What are the company's values? What is their vision for the future? Are they making smart strategic decisions? Are they investing in their people and their properties? Are they staying ahead of the trends? Those are the things that will ultimately determine their success.
That's great advice. It's a reminder that investing isn't just about chasing the latest stock price. It's about understanding the company's fundamentals, their strategy, and their ability to navigate a complex and ever-changing world.
Well, this has been an incredibly insightful deep dive into the world of Oriental Hotels Ltd. We've covered a lot of ground, from their financial performance to their brand strategy to those broader trends shaping the hospitality industry. But what's really fascinating is how all of these pieces fit together to create a larger narrative,
Hmm.
a story that's still unfolding. Yeah. It's a story of legacy and innovation, of challenges and opportunities, of a company that's trying to find its place in a world that's constantly evolving. And the most exciting part is that we don't know how the story will end.
That's the beauty of it, isn't it? The future is full of possibilities, and for companies like OHL who are willing to adapt, innovate, and deliver exceptional experiences, the future looks bright.
Thanks for joining us on this deep dive. We'll see you next time.